Ladies and gentlemen, we're back and now we're going to talk about the future of finance. I would like to welcome my co-host, its company MaGESpire, and the moderator of this session, Bowie, founder of MaGESpire. Bowie, the stage is yours.
Thank you very much. Hello, everyone. Good morning, good afternoon, good evening. My name is Bowie. I'm a founder of MaGESpire, also the co-host for the DigitalWeek.Online, the FinTech track today. So our panel is the future of finance, digital asset, and beyond. And I am very excited to have 4 seasoned speakers. Michelle Lee, the head of research from AMTD Digital. We have Floyd DiCosta, co-founder, Armour, and blockchain Worx. Patrick Schueffel, co-founder of Tokenomatic and also a professor. And Nate Clark, the chief product and strategy officer from Tyme Bank. And I have the privilege and honor to moderate this panel. And before we get started, I'd like to ask each of you to give a brief background of yourself so that all of us to get to know about you. So why don't we start with Michelle?
Yeah, sure. Right now I'm the head of research of AMTD Group. Last year I was leading AMTD's effort in applying for a Singapore digital wholesale bank license there, and our fintech subsidiaries in Singapore, in insurtech, in payments, in digital exchange. That's about me.
Thank you, Michelle. How about Nate?
I'm Nate Clark. I'm part of the founding team of Tyme, and we are emerging markets digital bank. I was a token American on the founding team of the South African bank. We started as a fintech, but then 2 years ago, we launched our first bank in South Africa, and we're just about to cross 3 million customers. And then we've just done a deal to enter the Philippines with JG Group. So we're applying for a new license there. Nice to meet everyone.
Thank you. That sounds exciting. I would love to learn more about it, which comes later. How about you, Patrick?
Hello, everybody. It's a pleasure being invited to this panel. My name is Patrick Schueffel. I'm located in Switzerland. I've spent many years in banking and private banking, and have then switched to an academic career where I look at fintech. And of course, fintech can't do without crypto these days. And so that's my field that I look at from an academic, but also from a practical perspective as I'm active in the startup scene.
Thank you, Patrick. And Floyd.
Thank you, Bowie. Hi, guys. My name is Floyd DiCosta. I'm based out of Singapore. I'm the co-founder of Armour, which is a cybersecurity venture that was accelerated by Airbus and featured among one of the top 25 innovations worldwide in cybersecurity. Apart from that, I'm also co-founder of blockchain Worx, a Singapore-based fintech regtech venture. Our focus is around helping institutions harness blockchain technology for digital transformation. Separately, we were also part of a consortium and co-applicant for a digital full bank license in Singapore.
Thank you, Floyd. I actually didn't get a chance to introduce myself. So I'm actually a woman with many faces. One side, I do a lot of angel investment into technology companies. I'm also a partner of a venture capital fund called True Global Ventures, focusing mostly on blockchain companies into 4 specific verticals: financial services, infrastructure, gaming/entertainment, and AI/data analytics. Besides investment, I also run MaGESpire, which is an education venture development group, including a consultancy arm helping companies in terms of business development and market access. And I also run MaGESpire, and I do a lot of educational talks, conferences in tech, fintech, blockchain, emerging technology, and investment related topics. So today is more about digital finance and all these digital assets. Mostly we'll cover 3 major areas, including digital banking, like CBDC, asset management, for example, like traditional security versus virtual asset, and also lending and payment. So my first question goes to Michelle. I know that you've been with AMTD for a while, and what is your latest development of the China CBDC versus, CBDC, the central bank digital currency versus the cryptocurrency? How will it play out? What are your views?
Yeah, sure. So the first thing about the digital RMB in China is that it has nothing to do with blockchain. Okay, so it's a very centralized system. So the way it runs, it's almost like a balance in your digital wallet. You can open a digital RMB wallet with a few of the state-owned banks, such as ICBC, for example. So a few cities, such as Shenzhen, Beijing, and Suzhou, are chosen as a pilot city. So it's only in the pilot stage right now. So through a lucky draw among the registered users, the citizens, they can receive a red packet in the format of digital RMB in their wallet. So only a few selected merchants are able to accept the digital RMB. So to use the wallet, you need to download an app. So when you pay, the merchants just basically scan your QR code in your app. So it's very similar to WeChat Pay or Alipay. So technology-wise, it's not blockchain. So I think the really interesting question would be how it will impact the data monopoly of the technology giants in China. It's a very hot topic. If you see the penalties comes out today on 3 of the largest technology giants in China. So for those technology giants, the concern from the regulators, it has always been their data monopoly, especially the consumer data. So how the digital RMB can challenge their data monopoly? That's a very good question, and how that would impact the business case of those technology giants is really interesting. For digital RMB or CBDC in general versus cryptocurrency, I think it's really interesting because I think crypto, especially Bitcoin, from the starting point, it aims to replace fiat currency. To be frank, so of course, the current overall market size of the crypto has now threatened the major fiat currencies. Not yet. So it's really interesting how different countries approach crypto with very different attitudes. For example, China and India just banned the crypto, right? But for other countries, it's not that clear. I think different countries definitely give very different level of priorities to this issue and also to their own digital fiat currency. But when Facebook's Libra came out, especially the first version of Libra, it definitely alerted the Chinese central bank. So that's why they accelerated the whole digital RMB project. They definitely see the threat from Libra and also crypto in general, right? So in my view, I think all major countries should be alerted to the potential threat from crypto. So because governments in general they derive significant power from monopoly of their own fiat currency, right? The monopoly power of issue fiat currency, and So especially the threat, I think it's major for a global currency as USD, right? I think going forward, I think a possible thing would be that maybe the US dollar would be challenged by another digital currency, digital fiat currency. Then that newly emerged digital fiat currency will fight against the crypto. So that's a possible scenario. Yeah.
Thank you for sharing. Patrick, with your background, ex-banker for such a long time, what are your views on digital and tokenized security? What are the opportunities or challenges around the fund and wealth management for digital asset? What are your views on it?
So it was very interesting listening to Michelle and the take and the Chinese take on it. It is somewhat very different here in Switzerland. So as opposed to banning it, Switzerland is trying to embrace it. And you can see that on various levels. For instance, the legislation is put in place in order to actually give it a constitutional, a regulatory frame that you can legally use it. And you can also see it with certain steps that some cantons are moving towards accepting Bitcoin, for instance, as tax payments. So instead of doing away with it, it's trying to be embraced. And that has also to do with the fact that Switzerland doesn't actually see a monopoly on its money. So there is a long history of parallel currencies. So there is a private bank that issues another franc, for instance, already for 100 years, and another currency. So the concept of parallel currencies has been around for a long time, and that those are now cryptos is just one logical further step. Having said all that, the Bitcoin itself, and maybe that's semantics, but it's also a fiat currency in the sense that someone told us, Satoshi, 10 years ago, 12 years ago now, that it would be worth something at one point, and it became worth something. Similar then to states telling us nowadays it is worth something. And whereas tokens typically give us the ability to use something, to use a network, to enter a network, to draw out some utility of that network. And this is where then now wealth and asset management comes into play. And so these assets, and they are increasingly becoming into the focus of banks here in Switzerland. They are worth something. It's hard to figure out what, but people are increasingly asking for an exposure to crypto. They ask, how can a portfolio of crypto be built up? And so mixing maybe 1 or 2 Bitcoins into the portfolio is nice for historical reasons, but I think we see now a very interesting new step into the world of portfolio management, managing digital assets, managing this right to access networks. And I think this is what's happening now, and DeFi will add on to it, and we will see a wealth of new opportunities in this asset management, wealth management area.
Absolutely. Thank you for sharing. Floyd, I know you are the expert in blockchain. What are your views? How will CBDC visualize digital finance, and what are the opportunities for institutions to get started for the use of blockchain in the digital banking?
Bowie, that's very kind of you. I'm hardly an expert at this, but to answer that, I want to build on what Patrick and Michelle actually said. And the whole idea about, Michelle started with Libra and then how the Chinese accelerated, right? The work on the renminbi. If you take Libra, one of the reasons why it saw a lot of acceptance, because there's no one single nation behind that, right? Or it's not a national thing. And that's where even things like Bitcoin and other cryptocurrencies could see or find takers. So it's not issued by any single country, and it has more universal kind of acceptance. Also, if there are digital native apps like Facebook, like Spotify, and that can automatically utilize this currency, there's already utility and value comes in. Point number one. Point number two, also, it's, again, if you look at it, there's the private digital currencies and there's the central banks, CBDCs, right? But what if you take a middle part? Now, you guys are based, for example, you're based in Hong Kong. If you see the monetary, setup in Hong Kong, the currency is actually controlled by the central bank, but is actually issued by the private banks. So you have a kind of a hybrid model there, where the volume and the monetary policy is set by the central bank, but you have the 3 banks. I think it's Standard Chartered, HSBC, and I think it's Bank of China that actually issues the currency. So if you can have this hybrid model, I think you have a great thing going there. And I think that's what even China is trying to do. How can it have a 2-tier model with a central bank and then a set of financial institutions below, either traditional banks or the more modern tech platforms, right? So that's point number one. And I think that would be an interesting play. Coming to blockchain. Now, I think blockchain's been around for like 10 years now. And it has its own share of it. It has its benefits. It's very clear. It's distributed. It's transparent. It's any transactions written there forever. But on the other side, if you look at the generation one blockchain, Bitcoin, and that, those were really slow, still consume a lot of power, still are based on proof of work. You've got, Ethereum and things that came after that with the virtual machine, and you could do a lot more with smart contracts and automate a lot of the process and stuff there. And now you've got the next generation of blockchains coming in, which are a lot more faster, not really reliant on proof of work, still green given the focus on sustainability these days. And I think there's a case to use blockchain. But like Michelle said, one, it's a new technology. So, the first central banks might not go in there. But given that, over 70 central banks worldwide are already, testing CBDCs, already trying to do something in the space, already piloting use cases, and piloting CBDCs across a number of use cases. With blockchain still evolving, yes, they'll try to see if the benefits outweigh the challenges that are there and issue a digital currency. But if they need to get started, I think, there's numerous technologies and they'll adopt one and get started. I guess it's also the shift to the first mover advantage. Libra started off as something brilliant. And then, the Chinese government said, hey, no, we've got to get the renminbi out first. And you can imagine every other country is in that race now. So it's just a matter of time. Is it going to be a private consortia that issues? And we already have the case of stable coins, which today offer a great on-ramp and off-ramp into fiat, if you ask me, right? But I guess within this thing to bring the first digital currency out, there's always going to be that thing to, can we go with stable technology that's already been tested, that's already been validated, and can we get quickly started? Because remember, it's not just the banks or the central bank that needs to understand blockchain. It's all the participants, the multiple stakeholders that also need to kind of fit in, right? Because then the banks need to issue and be able to transact. And then it goes down to the next layer where you have merchants and things like that that need to be able to kind of work with this new technology now. And can blockchain do that? Perhaps. Can it do it efficiently? I don't know, but it's evolving and someday it will. But perhaps today some of the central banks see benefit in starting with technology that's already available out there.
Yeah, I hear you. I think so far they still feel comfortable with a centralized environment instead of decentralized. Thank you for sharing. My next question goes to Nate. I know you've been with the bank for a long time. You're the founding partner. So how are the banks facing the new digital competitors? What are your views on it?
Yeah, I think it really, in many ways, the way I view we view the landscape in digital banking as being very different, whether you're in a developed market, a mature market, or an emerging market where we play. So if you look at what's happened in Europe and what's happening in Australia and Hong Kong, I think it's really the banks are obviously threatened by the digital banks, given the operating leverage, et cetera. But at the same time, I think the existing banks are catching up as far as experience, proposition, their digital capabilities. And it's a very saturated market. So it's really difficult to actually differentiate. So in many ways, I feel lucky to not be in a developed market when it comes to digital banking. And you've already seen the results in Australia. There's a few digital banks launched. 2 of them have already either been sold or shuttered. And I think we're likely going to see similar in Hong Kong and Singapore, and it's going to be difficult to differentiate. Kind of where we play Tyme, very different dynamics. We compete against the existing banks, but we're mostly going after customers that the existing traditional branch banks are not serving. So you talk about South Africa, then you look at the Philippines, where it's less than 20% adult age is banked. So I think that the way that's shaking out is very different. I think our new digital bank entrants, as they release licenses, I think the big competition we see is between new digital banks and the platform players, who will likely get a license, either they have or over time, the Grabs of the world, et cetera. And given we are not a platform player going into it, we've taken quite a a contrarian strategy that's worked well so far in South Africa, in that we're betting on tying up with the physical retailers to essentially get some of the benefits that the platform players have. So, and maybe if I step back, we feel there's kind of 4 big ingredients to be successful in emerging markets in digital banking, or in banking, financial services. One is you need to have scale of customers and scale of data. So obviously the Grabs of the world, the large wallets, they have that. But in fact, the large physical retailer groups. So if you look at JG Summit, who we're partnering with in the Philippines, or Pick and Pay, our big partner in South Africa, in South Africa, 97% of retail transactions still occur in the physical retail environment. So they actually have enormous throughput of customers walking through their doors. And JG Summit, as an example, one of the biggest loyalty programs. So they actually have probably not as rich and wide a data set as one of the wallets, or a Grab, but it's nothing to be laughed about. You're talking about 10+ million loyalty customers, et cetera. And so I think in both these players, digital banks and the platforms, will be good at the tech, good at the experience. So then where we really focus, we think is key, and is actually why we've seen a lot of success in South Africa, is in emerging markets. Beyond the customer base, a good experience, you really need to have to solve the cash problem. This is actually the biggest problem in emerging markets. How are you getting cash into this digital ecosystem? And this is where our partnership with the retailers is key. So in South Africa, you can walk into 1,400 like big box retail stores who have deep liquidity of cash in, cash out, because they're supermarkets, et cetera, and you can do a real-time cash in and out very seamlessly. And I think whereas some of the platform players, they can compete with that with probably smaller liquidity pools with the smaller players. I think kind of having that large physical retail chains, in particular supermarkets, has been key to solving that for us in South Africa. And probably the last piece is that what we pair that with in South Africa is an agent force that actually helps the customer onboard. So even though it's a digital onboarding process for us, we actually see that of the 3 million customers who have onboarded with us, 85% have actually onboarded with us with what we call an assisted self-service. So it's a fully digital process, but there's someone sitting next to them. So we actually have what we call an ambassador in the store, and that kind of journey. So we think kind of on top of the normal challenges, we're getting adoptions in emerging markets for digital banking, cash, and that, call it bridging the digital divide, are 2 big things you have to solve for.
Thank you for sharing. So Michelle, my next question is about digital lending. I know you're leading the AMTD's application together with Xiaomi, right? So for a digital wholesale bank license in Singapore, what's your vision in the SME lending space?
Yeah, it's very sad that we were now among the first batch of recipient of the license. I think we were close. We were close, but we are waiting for the next batch. So our consortium's vision for digital lending. First of all, the type of license we are applying for is a wholesale banking license, meaning lending to corporates, SMEs. So our vision is to incorporate the consortium's capability, especially Xiaomi, to help the SMEs to collect more digital record, more data. Because the biggest problem for SME lending is that SMEs, they have limited financial record, they have no collaterals, you have no collection of real-time data. So one of our planned solution is to incorporate Xiaomi's IoT products, such as smart camera, into the whole supply chain. So to really to have that end-to-end digitalization, which will provide the necessary data for credit assessment, from the raw material purchasing stage to sales and to the last mile logistics. So you have the whole chain of real-time data to track. And that's for your credit assessment and also for your risk management. So that's one. The second direction is to provide banking as a service solution to digital platforms. So the digital platform could be
Is that me or is that can you all hear me?
I can.
Yeah, I think it's
I think we
Michelle.
lost Michelle there.
I think it's Michelle. But while we're waiting for Michelle with the connection, anyone would like to comment on the vision on the lending and payment space?
Let me say something on that, right, while we're waiting for
Please.
Michelle. And this is just
Yeah.
picking up on, what, Nate was saying, right? And it's today, if you look at it, the largest wallet provider, of course, in Singapore, like he had alluded to, is Grab. I was on a forum a couple of weeks back, wherein you've got now all sorts of different non-banking, non-financial institutions that are now looking to get into this place and challenge traditional banks, right? And that's because they have this huge or super large user base. In fact, there was this one talk where there's an airline in Asia which could look to get into banking and look to kind of monetize its loyalty program, and could single-handedly become Southeast Asia's largest bank. And how during the current COVID-19 situation, with everything locked down and hardly any flights, this company could actually say, hey, we have the customers, right? Right now, what are these other services that we can provide? And is there opportunity to do something with the wallet service that we have, right? And we could pretty much become the largest bank overnight the moment we give all our frequent flyers a kind of a digital wallet that allows them to pay and to use their cards and avail of different services, right? Now, of course, as you can imagine, people flying are people that do spend a lot, right? And if there's some way to tie that into the loyalty, which says, whatever you spend using the wallet instantly gets converted into miles and it doubles if you use the wallet, or whatever way you can, or you automatically, number one, have a large customer base. Number two, have a base that's digital friendly because they're flyers. They're more likely to be people that are, tech savvy. Point number three is that they spend. And even if nothing else, just to buy the tickets and collect those points, right? So there's a case where now you're going to see a lot of entrants coming in to offer different types of financial services, of course, based on local jurisdictions, but coming in not from traditional financial institutions, but from all over the place. In fact, like you said, Grab, it was originally a taxi, a mobility service provider, right? Their partner, Singtel, is actually a telco. And now you've got the airline, very popular Southeast Asian airline, that could be Southeast Asia's largest bank, should they decide to get into that space.
Thank you, Floyd. Michelle, you were off a little bit. Do you have anything that you would like to finish your comment?
Yeah, I think currently, I think the IoT and banking as a service solution, it's still in very early stage. And I'm really hoping ways to help with blockchain and cryptocurrency, maybe it can really help the SMEs to get more credit, because that definitely will bring more transparency and real-time data to the scene. Yeah.
Thank you for sharing. Speaking about cryptocurrency, I like to highlight we do have fungible token, and now the hot topic is non-fungible token, NFT. So obviously with the COVID, definitely accelerate the traction in the cryptocurrency / NFT space. I think every day there's a new record, and now we know. Tesla just, invested 1.5 billion of USD into Bitcoin. And for NFT, right? I think there's a new. Have you heard about the NBA Top Shot? So they basically have this moment where all these great NBA players, with the moment of a dunk or a 3-point that 10 to 12 seconds, they actually can sell it and convert it into a non-fungible token. The latest one, they sold it, the James Bond, at over 200,000 for a just 12 seconds of that moment. But I think people would think this is crazy, but the digitally, you actually own. You have proof. You have, because of blockchain technology, you actually have the ability to prove your ownership of owning that 12 seconds of the special moment, which is why I think people are crazy buying all these into the NFT space. But personally, I think there's still a lot to grow. I think today someone just bought an NFT. I actually don't remember the name, but it was a 69 million USD. It is ridiculous.
Yeah, it's people. It's people's piece.
Yes, people. Yes, thank you. So with this in mind, how are the institution getting into the crypto space? And is regulation of the crypto available? I like to talk about a little bit on the crypto, corporate treasury, in terms of investment, in terms of the product and exchange and even stable coins. I'd like to hear everybody's thought on it. How about we start with Patrick?
Yeah, thank you. Very good question, Bowie. NFTs. So this is the the latest wave in crypto, I would argue. So we are not here yet when I look at institutional players. So especially in Switzerland, they are now moving into crypto as such. So Bitcoin, Ethereum, and so on, they're making their slow steps. And very interestingly, it is purely demand driven. So it has nothing to do with these very conservative private banks wanting to sell that to their clients. Quite the opposite. I just recently, I was told by one of the big private banks in Switzerland, investing in crypto is not investing, it is gambling. So they, however, are facing the problem that clients are coming and they sat maybe at the hairdresser next to someone who told his hairdresser, I made 100% in crypto over the last 6 months. And then this wealthy individual goes to his relationship manager and says, this guy made 100%. I want that too. These 2% you are generating is not sufficient. And now they have this problem of getting into crypto, not being disintermediated by some other players, having still then the client interface and making the client happy by getting a crypto exposure. But this is conventional crypto, as I would call it, and not the non-fungible tokens yet. And that's what they're scrambling to do. And they're often wrapping it into bankable products. So then comes in a layer on top of it where you have additional costs also incurred, let it be an ETF or whatever. And so they are sold via banks with ISIN numbers and so on, so that they are also then neatly on their tax statements. And that is the wealthy individuals, but we also see it now at places such as pension funds. They are now considering moving into crypto and maybe an allotment of 1 or 2% of their portfolios. But this is, if you talk pension funds, it's huge. So it's really big. So when those institutionals come, then will be another trigger upward. But bear in mind, it's not NFTs yet.
No, I agree with you. I think in general, corporate are very slow. I think they just woke up in the cryptocurrency space, but NFT definitely not yet. How about you? What do you think, Nate?
Sorry. I mean, they are slow. Institutionals are slow, and Swiss institutionals are extremely slow.
Yeah. No, on the non-fungible tokens, I think it's going to continue to explode because, listen, I think there'll always be these silly things that people are buying, or silly in our eyes, right? But at the same time, I think it's actually just making something that's always existed much easier and scalable. So, I mean, I'm a big American football fan. Tom Brady is, my hometown team for a while. His rookie card, piece of cardboard, just sold for $1.3 million, right? So now all these people are just going to create. Now there's always risk. It's like with art, right? There's a risk that it's fake and this and that. And I think that type of collectible world is one example. It has huge application to move in the digital world. So now all the athletes are jumping to create digital cards. And these, people have been collecting baseball cards for 100 years. As crazy it might seem, I've never kind of spent more than a couple dollars when I was a kid on a baseball card, but So I think it actually has huge application for like partial ownership of artwork and kind of help with a lot of that trail of train of ownership. As far as how kind of corporates get into crypto, I actually think there's going to be beyond the treasury side, which we're obviously seeing the early days, but I think that'll gain steam. I think we're going to have a big boom in more traditional brands distributing crypto, in particular, like ourselves, like a bank. We're kind of in the early days of exploring that. But what's happening is, I think in many industries, when they're young, most of the big brands are B2C. But now you're seeing, and I think a bank who's hasn't grown up with a crypto heritage a regular bank would never touch doing custody themselves and kind of get into an exchange themselves. But now what you're seeing is, like with the likes of Paxos, who's in the US, who we've kind of engaged with quite a bit, who's providing crypto exchange and custody as a service for PayPal, as a service for Revolut. And I think the B2B space is maturing significantly. So then the likes of us or other, call it more regulated traditional brands will be able to distribute crypto with a much lower risk. On the regulation side, I think it'll still be tough for the banks, et cetera, because they're going to be always held to a higher bar. They're going to have to go to the Prudential Authority and ask permission to go. In a place like South Africa, as an example, they're getting close, but they haven't yet passed crypto regulation, which opens a huge can of worms for us, because it's like, how do you account for this? We also have this additional layer in South Africa with exchange control. So it kind of gets, I think it's harder, but I think they're going to get there soon, actually. Philippines, as an example, is already there. Most markets are there. So I actually think we're going to see a boom of traditional brands or banks, et cetera, distributing crypto very similar to PayPal, et cetera. And I actually think it's a really good opportunity for them, because, if I use, I was talking to someone the other day, my mom would never buy crypto from, Coinbase, because she's never heard of Coinbase, but now she's heard of Bitcoin. And maybe she, like you said, Patrick, maybe they want 5% of their portfolio, because that's what they've been told, needs to have crypto exposure. So they would go to Bank of America and buy it, because they know that they can get the money back, even if it's speculative. At least they know Bank of America is going to exist. So I actually think it's a really big opportunity for not the niche, the crypto fanatics. Hopefully we, as Tyme, one day have a crypto offering. If we do, we're not going to be catering for those people. We're not going to have 100 different coins on, and we're not going to be able to have all the bells and whistles. But I think we will cater for, call it the 80%, the everyday person who wants to add it.
Thank you. Yes, I agree. How about you, Floyd? What are your views on it?
Now, I think Nate hit it on the head there, right? If you look at the last, let's say 2 or 3 months, right, and you've seen the sudden surge in crypto, right? Now, 2 key things there, right? Number one is, earlier on, it was a lot more of people that were anyways into blockchain technology or anyways looking at working with crypto that were participating. But over the last 2-3 months, you've seen a huge surge of people who are common everyday folks that decide to get in the space. Point number one. Point number two, they didn't come and buy this via the traditional crypto exchanges. They actually came in via like apps like Robinhood and things like that, right? Things that people are already accustomed to. And that's where you can see a surge and adoption come in, right? Now, yes, you're right. Where there are countries where capital controls are in place, places like India, places like China, where you're seeing a kind of a national ban come in, and that is because they tightly control monetary policy and stuff like that. But on the other side, you look at Singapore, and DBS Bank, which is the biggest bank, but which is also the biggest or most trustworthy brand locally, if you look at it from that perspective, has started to offer crypto services now. And so people will come in. But here is the other point. Even if people don't go out there and buy crypto directly themselves, right? If there are funds, that traditional mutual funds or traditional funds that people invest in, right? And now someone goes and buys invests in units of those fund of sorts, and that fund has 10% exposure to crypto, they automatically will have exposure to crypto. They don't even need to know what crypto is, or they really don't need to know what blockchain technologies, and they're automatically now invested in it, correct? Now, think about Tesla. If they've got 1.5 billion on their books, you can have all sorts of other organizations, but then it could go to the next level, right? When you own debt of these companies, and now you own part of that in some form or the other. Take it to a whole new level where you've got funds now, and you don't, like I mentioned, you don't even know that you own it, but yes, you have units of a certain fund that has, apart from shares and bonds and other financial instruments, also has some crypto in it. But I want to come back to the point that Patrick made earlier, wherein you've got wealth managers now talking about, talking about crypto. And I was chatting with a couple of them, and what they told me is exactly that. We don't understand this, right? This is not our space, but our customers are asking us. And if we can't provide that, they'll go to the next guy, but they just won't take their crypto business there, they'll take the rest of the business there. So now you've got traditional wealth managers who are being forced to look into this and evolve ways to come to the table. And then when you've got banks like DBS and the one in the US that Nate spoke about, and you've got brands like Tesla and other companies looking at it, and the media covering it. Bloomberg, you watch Bloomberg, you take a look at Reuters, you take a look at CNBC. It's all over the place. And now the common man is starting to get involved to say, how can I get a piece of this? Yes, very unlikely that he's going to go register on a crypto exchange and figure out how to get this sorted. But on the other side, yes, there are simple apps like Robinhood or things that he's fairly familiar with. Perhaps Nate's app, right, in South Africa. And if I can buy crypto on that and hold whatever money I have in my wallet in different currencies, I'd go for that, right? Because it takes nothing. The other pieces, can I spend that as easily as I would spend the South African rand or the US dollar? If that gets fixed, then you'll see mass adoption. Then there's no question of adoption. Then it's just about using it like just every other currency, right? And I think that's where the potential. And then the CBDCs and the stable coins we spoke about earlier provide a great off-ramp and on-ramp into crypto, and a way to kind of then actually not just have a portfolio, but manage your portfolio of all sorts of different currencies, right? And cryptocurrency doesn't have to be the gamble then. It's one of the other things. Yeah, but then if you still talk about Bitcoin, that will go up 20% and then fall 25% the next day. The people who can stomach that, you better leave not more than 1 or 2% of your portfolio in crypto then, right? You don't want to wake up in the morning and realize you've lost 25% of all the wealth that you've accumulated over the past few years, especially some of the elder folks who now have retirement money and pension funds, like you said, Patrick, on it, right? That's the risk there. You don't want to wake up tomorrow morning and realize all your hard-earned pension money suddenly went out the door with you having done nothing really. You just went to sleep and woke up and it's gone, right? And that's where the risk lies. Of course, you're happy and thrilled if it went the other way, if it went up, right? You did nothing, you went to sleep, you wake up, and there you go. But yeah, I guess these are things, and it's still early days, but I guess it's going to get fixed. And now with, like you rightly said, Bowie, with corporates coming in, with brands lending their name to this space will find its balance ultimately.
Yeah, it's very exciting lately, especially the whole year with COVID, basically accelerate all the digitalization for the whole world. So how about you, Michelle? We're talking about digital asset for corporate treasury. I know the market is huge, but how big is the market potential? What are your thoughts about it?
Yeah, sure. I just added up the cash equivalent of all the Nasdaq listed tech companies. So in total, it's 1.2 trillion. So it's not the small size, right? But I'm not expecting all those tech companies are going to invest right away in crypto. I just think some then are just starting, right? It's all started with MicroStrategy, then now it's going really global. Like one of a major company listed here in Hong Kong, it's Meitu. It's a photo beautifying app company. So they announced they are investing into Ether and Bitcoin, 22 million US in Ether and 20 million in Bitcoin. So I think that's globally, that's the first major company that is buying Ether. So if you look at their statement, they're saying reason why they're buying Ether, it's not just for corporate treasury, right? It's because they are preparing for the company's future potential Ethereum-based DApp. So meaning the company wants to incorporate Ethereum-based DApp into its current ecosystem. So I think the whole thing of DeFi and NFT could open up opportunities for those virtual economy-based company, not the real economy company, like those companies that are involved in virtual stuff, right? It makes sense for them to go for that way. In that case, they need Ether for the gas, right? So that's the reason for them to accumulate Ether. So I think it's really interesting now, from now on.
Yeah, speaking about it, I like to share a little, one of the portfolio company of True Global Venture. We have invested a company called the Sandbox. That was 2 years ago. So basically the Sandbox is a platform where they combine with for game players, game developers, and design, and they offer all these virtual lands for people to buy. So on top of that, you could land it or you own it, and you can build games on top. You got to have lands, virtual land, in order to showcase your game. And
it's like Decentraland, right?
Yes, it is. It is. So, and they have been doing so well. I'm very proud of them. I'm very happy. I think we invested, we believe in the company, we invested in the equity, but at the same time, we also got this same amount of the money equivalent in their token, the Sand token. And now I think I think it's already 60x in terms of the token. So very, very happy and excited for them. And they are just right in the NFT space. Like just in February, they sold, I think there was 200 USD of virtual land just in 1 month. But think about it, just virtual land. You can own it digitally, but you cannot touch it, you cannot feel it, but you can actually see it and interact with all the players. So NFT space, cryptocurrency space are, I think we are just getting started. So for as a new bank, Nate, I have a question for you, Nate. How are you impacting the other traditional banks and all these challenges? How are you handling it?
Yeah, I think there's a few reactions we had in the first year. One was around price. So South Africa is one of the most expensive banking markets in the world. We were actually the first new license issued in 20 years. And it's basically 5 banks own and probably over 90% of retail banking in South Africa. So a bit of an oligopoly there. So we came in kind of disrupting price by more than half. So there was some movement there. But so that was one reaction. The second reaction was around just trying to drown out the digital message. So I think, a lot of what the traditional banks did is they created these separate digital accounts and propositions and just tried to blast it. Almost not that they necessarily, and they were kind of a combination of low cost and digital led. In some ways might be being a bit harsh, but a little bit gimmicky, not a full proposition. But they have the spending power, right? in digital marketing in the airways. So I think that's the kind of biggest challenge. I think what's happened though with COVID is that I think they have their own much bigger problems. With their own, credit books, they're kind of under strain themselves. So I think we're probably kind of the least of their worries. We're growing quickly. But again, a lot of those customers are more skewed to what we call, they may have had a bank account, but underserved customers. So I think, for now, I think they're leaving us alone for the last year anyway, but I'm sure they'll be back.
Wait, thank you. Patrick, I personally have a question for you. I know you're a professor. I'm sure you ongoing, either virtually or physically, you deal with a lot of students, right? So if student wanted to come into blockchain space or even cryptocurrency space, or anyone wanted to upgrade themselves, what would you recommend them to do?
That's a very, very good question. And as there is no textbook that I could just say, you know, that's on the shelf, and like in other subjects, I could just get it off the shelf, hand it over, and say, read that, and that's a good starter. That doesn't exist in the crypto world. It really doesn't exist. And when I got into that topic, and that was 2013, it was via a basic startup, sorry, a basic meetup, and this is how it triggered me. And I've been to many meetups in the meantime, and I think I got the most valuable information there. In Corona times, of course, there are no meetups any longer, so it's actually formats like this we are attending right now. I would recommend students to attend, to join, to exchange to jumpstart their crypto knowledge. That's really, as unconventional as it may seem, that's what I found most interesting. And also, let's just assume there would be a textbook on crypto on the shelf. It would be outdated by the day after tomorrow. So not even worth it. So keeping on top of things by exchanging with other people that are interested, that's the most valuable recommendation I can give.
Thank you, Patrick. I totally agree. I think if I have to give one piece of advice for anyone who wanted to get in, I think buy perhaps 100 USD or even $10 USD of Bitcoin or Ether, because the whole process you actually can learn a lot, how to manage your public key, how to safeguard your private key. This is not an investment advice, just a disclaimer, but the whole process actually can learn so much. How you're going to find out which exchange actually has a better rate or whatnot. So I think no matter what you do, first thing you have to do is to get yourself educated. So this is important. Floyd, question. You've been in the blockchain space for years, right? So I understand now we started to get more, attention from the public. But then, what are your views? It's still moving a little bit slow, right? Then what would you recommend to people who are listening to our panels today? What should we do, like collectively, to get more awareness and so that we can massively adopt to this technology?
Good question there, Bowie. And I think one of the other panelists, I think it was Michelle, who put it in perspective, right? So I was talking to one of the leads at one of the world's largest iBanks, right? And his take was, we need to get into the space, right? But it's just not that large for us. And he said, let me put it in perspective for you. My desk in Asia alone, trades more Forex on one single day than the entire market cap of all cryptos put together. So keeping that in perspective, is it worth that I set up a desk for crypto? Number one. Number two, we're regulated, so I have to figure out how I'm going to address the regulatory part of it. How do we keep track? Is there tax? Which jurisdiction and stuff like that? So there are a lot of these challenges. There are challenges where people will get into crypto and next day figure out, hey, there's suddenly a law that came in that either said, hey, it's accepted or it's completely banned or it's downright illegal to even participate in these things, right? Point number one. But I think today there are enough and more forums online where people can go and, start in some small way to participate in it, correct? Now, like you rightly also, pointed out, that none of this is financial advice, But people are starting to get interested because now common folks are seeing that there is this new transformative piece out there, right? From the biggest, from the most trusted, even today, central banks, to some of the largest banking brands, to some of the largest, auto brands and things like that, getting into crypto. People are starting to get interested. The media is all over it, right? Now, let's just be fair. In the past, not everything in crypto was very clean, right? If you ask me, if you go down back to 2018, 2019, it was all about scams. It's all every second day a crypto platform is hacked, or there's some scam and some all sorts of things, right? But I think now that's starting to change. And as this community grows, you'll have common everyday folk that start to participate in it. You've got new blood coming in, and so now this. It becomes like it gets diluted and it becomes just like any other community. And with this community, you have forums, you have online forums like the Digital Week, which we're part of right now, and people watching, people listening in, and people attending. Yes, Patrick's right. Unfortunately, due to COVID, there are none of the meetups anymore. But I guess a lot of that has also shifted online, right? And I think now there's an opportunity for people to go and start to explore and start to participate in some of these forums. And then when traditional applications, traditional tools, like Robinhood or like any other app that you commonly use, or your bank starts to facilitate a channel for you to step into this otherwise crazy world of crypto. I think that's the opportunity people will latch on to when they trust some of these apps. And again, they will perhaps start with small amounts. And it's not like everyone's going or every other institution is going to go and buy 1.5 billion of crypto. No, I don't think that's going to happen. But I think people are going to start to dabble with this. And like we earlier said, the moment you have digital currencies, whether it's Libra or whether it's a CBDC, that automatically lines up, and along even with stable coins, right? Today you can even invest in gold using stable coins in crypto. And then when all of these stack up or line up one below the other, and you find them on more formal exchanges, more formal forums, more formal apps, non-crypto related, then it's just like every other thing. And perhaps the day will come when crypto won't stand out, and we won't call it crypto. It'll be just one other asset class that's out there alongside a whole lot of other things that have been there traditionally and that will evolve separately going forward.
Yes, thank you, Floyd. That's pretty much to the end of our panel discussion. But before I allow anyone to go, I actually would like to ask each individual for some final words about the topic or any comments on this aspect. Why don't we start with Nate?
Yeah, maybe I think everyone else will probably mention crypto in the final thought. So maybe I'll go back to the kind of last year's fun thing to talk about, or a sexy thing to talk about, digital banking. Yeah, I think it kind of what I was talking about earlier. I think in the emerging market space, and similar to what Floyd said, I think in the next couple of years we'll see a lot of kind of maybe players coming in we don't expect, not just the platform players. We're obviously making a big bet on physical retailers in our model, and hopefully we kind of continue to do well in that in the Philippines. But I think the airlines is a good example. I think there's a lot of other large brands out there who have massive distribution and customer bases that know they have to go digital, and financial services is probably one of the ways they can do that.
Thank you, Nate. How about you, Patrick?
I think what interests me the most is how crypto will play out in the world of asset and wealth management in the future. So we've seen many bases in the value chain already being covered, like custody, like deposits and loans, like derivatives. However, what we don't have yet is a sound wealth and asset management offering, and that's tremendously important for Switzerland if it wants to keep its position among the financial centers of the world. And I'm very curious to see what happens there. And I see there's big white spots for the moment, and I'm looking forward to how this is being filled.
Yes, it's moving very fast. As you mentioned, the book we print for cryptocurrency for today and tomorrow will not be the same. So I will look forward to see all these changes along the way. How about you, Michelle?
I think the whole world is going through a paradigm shift from centralized model to decentralized model. It's not just limited to the money. It's everything. It's the governance. It's the sharing platform. So everything. So I think it definitely worth monitoring going forward. Don't shrug the decentralization trend off. Don't shrug it off. Pay attention to it. Yeah.
Thank you, Michelle. And Floyd?
Boy, a lot has already been said, but let me just put it this way, right? The future of finance is definitely looking digital, definitely looking smart, and is downright exciting right now. We are in very exciting time, and the future of finance is definitely going to be exciting. I'm looking forward to it.
So if anyone want to come in beside Patrick's comment, what would you tell anyone, Floyd?
Sorry, could you repeat that?
If anyone wanted to get into the blockchain space, into the cryptocurrency space, or CBDC, or even NFT, what would you tell people to do?
Again, this is not financial advice, but get started. Start small, get in there. There are too many people, and I meet them on a daily basis sitting on the fence. And every time it's the same question, should I, shouldn't I? I was like, get started with something small that doesn't matter. Be ready to lose it all. And if you can get in with that mindset, I think you're already there. The technology is very exciting. Remember, it's finance that's been around for the longest time, but now it's the tech space and how enterprises and organizations, startups are using this technology to pretty much revolutionize finance. And I think that's an exciting space. And if people are looking to get into blockchain, but even other tech, DLT in general, right? Distributed ledger technology, very exciting times. And I think folks should, whether it's startups, whether it's students, whether it's people looking to see how they can engage or how they can get involved, I think this is the time. And it's definitely the future.
Thank you, Floyd. For me, I would like to say one more time, thank you everyone for joining us for this insightful panel discussion around this topic. I think this type of topic is very exciting, is moving very fast, and it's a bit difficult to keep up. But as Patrick suggested, right, if you want to get in and learn about it, join all these virtual events. I think COVID, what was the beauty of it is that I get to speak to everyone around the world. So even Patrick is all the way in Switzerland and Floyd is in Singapore. I'm sitting in Hong Kong. I get to speak to everybody. And so that's knowledge. Knowledge is no limit, right? No border. So you can get all these information easily online, attend as many events as possible, but no investment advice to anyone. Just, get it started for a little small amount. Be willing to lose it, but the experience is priceless. I think the ability to distinguish by the time you'll be able to learn a lot to either distinguish even different projects. Are they scam or are they legitimate? I think that would be like a level go on the way. So I think that's the end of our session for today. And I would like to thank everyone for joining. We keep in touch. Just one quick question. If we want to get in touch with any one of you, how can we contact you? Michelle?
Well, LinkedIn is very easy to find me out there.
LinkedIn, sure. And Floyd?
LinkedIn and Twitter is the best. But,
great. And Nate?
Online.
LinkedIn works. Perfect.
LinkedIn works. Patrick?
LinkedIn too.
Yes, me too. I use LinkedIn. So I think that's all for today. And Sergi, back to you.
Thank you, Bowie.